Hello! Today we will be discussing the net asset reclassification updates that resulted from FASB's Accounting Standards Update 2016-14. Accounting Standards Update 2016-14 was released on August 18, 2016. However, the FASB has been working on this update for several years. These new reporting standards will be the first major set of changes to not-for-profit financial statement presentation standards since the issuance of FASB Statement No. 117 in 1993. The goal of the update was to improve the usefulness of information provided to donors, grantors, creditors, and other users of not-for-profits' financial statements, as well as to reduce complexities or costs for preparers or users of financial statements. There are many identified areas the FASB wanted to address for not-for-profit entities. Therefore, this represents the first of two phases of its project. The changes are effective for annual financial statements issued for fiscal years beginning after December 15, 2017. This means if your entity has a June 30th year end, the update should be adopted for fiscal year 19, or the year ending June 30th, 2019. If your entity has a December 31st fiscal year end, the update should be adopted in fiscal year 18, or the year ending December 31st, 2018. For interim periods within fiscal years, the changes must be applied for fiscal years beginning after December 15th, 2018. The amendments can be adopted early, and early adoption is encouraged by the FASB. All updates should be applied on a retrospective basis in the year the update is first applied. Not-for-profit entities will have to disclose the nature of any reclassifications or restatements and their effects on changes in the net asset classes for the periods presented. Comparative financial statements should also be presented retrospectively for changes to net assets discussed in this presentation. However, it should be noted that a not-for-profit entity does have the option to omit certain other amendments specified in the update that we will not cover today. The main provisions of Accounting Standards Update 2016-14 can be summarized into 5 categories: net assets, cash flows, expenses, investment return, and liquidity and availability of resources. In this presentation, we will be focusing on the changes to net asset classification requirements. Currently, there are 3 classes of net assets: unrestricted, temporarily restricted, and permanently restricted. The new accounting update would reduce the number of classes to 2. Net assets with donor restrictions and net assets without donor restrictions. According to FASB, changes in state laws have diminished the relevance between permanent and temporary restrictions. The new classification also is intended to address feedback the board received that the term unrestricted is often misunderstood. In addition, the 2 new classes of net assets reduces complexity, increases understandability, and enables greater use of multi-period comparative financial statements to allow users to better assess key trends. Not-for-profit entities can choose to further disaggregate, but they must at least present the minimum 2 categories on the financial statements. The top example shows the minimum reporting requirements that includes the 2 net asset classes and total net assets. The bottom example shows how the net asset classes can be disaggregated on the balance sheet. For example, a not-for-profit may wish to disaggregate net assets with donor restrictions if net assets are restricted for a particular purpose, or if they are expected to be maintained in perpetuity. There are 3 recommended formats for the statement of activities. The first example presents all information in one column. This format accommodates multi-year information the easiest. The line items highlighted in gray show the new net asset classifications. The second example shows multiple columns for each class of net assets. The use of a total column is optional as long as the change in total net assets is still presented. It's very important that labels and headings clearly communicate all columns and subtotals. The third example requires 2 parts. The first statement is the statement of revenues, expenses, and other changes in net assets without donor restrictions. Part 2 shows the statement of changes in net assets, which includes changes in net assets with donor restrictions. This format may be preferred by membership organizations or other not-for-profit entities that view the receipts of donor-restricted revenues and gains from contributions and investment return as incidental or insignificant to their daily operations. Now, let's look a little closer at what composes the 2 net asset types. Net assets with donor restrictions result from assets or contributions that have donor stipulations. This includes both temporary and perpetual restrictions. Information about the nature and amounts of different types of donor-imposed restrictions shall be provided either by reporting their amounts on the face of the statement of financial position or by including relevant details in the notes to the financial statements. Some examples of donor-imposed restrictions are included on this slide. These restrictions made by the donor can be based on time or purpose. Accounting Standards Update 2016-14 also made some updates to underwater endowments. So what is an underwater endowment? FASB defines an underwater endowment as a donor-restricted endowment fund for which the fair value of the fund at the reporting date is less than either the original gift amount or the amount required to be maintained by the donor or by law that extends donor restrictions. For example, a donor could give a $1 million gift requiring investment of the gift in perpetuity for a specified term. Because investments fluctuate in value over time, it's possible this endowment could be worth only $900,000 by the end of the year. Because the asset value is now less than the donor required amount, it's classified as an underwater endowment. Under the old rules, the $1 million endowment would be classified as permanently restricted net assets, and the deficit of $100,000 would be recorded as unrestricted net assets. However, under the new FASB updates, the net balance of the endowment of $900,000 would be all recorded as net assets with donor restrictions. The FASB update also includes some new disclosure requirements for underwater endowments. There are two types of net assets without donor restrictions: undesignated and board designated. Because the board is not considered a donor, any assets that are earmarked by the board for a certain use will be considered net assets without donor restrictions. Also, keep in mind if the board delegates this decision to internal management, it's still considered board designated. It is suggested that all not-for-profit entities have a policy on board designation of net assets so that net assets can be properly classified. The board could designate net assets for many different purposes. This slide shows some of the more common designations, including future programs, investments, contingencies, the purchase of construction of fixed assets, and many other uses. In addition, the board could create an endowment fund by designating a portion of its net assets without donor restrictions to be invested to provide income for a long but not necessarily specified period. These endowment funds are called quasi-endowment funds. They are typically classified as net assets without donor restrictions. However, it's possible that they could be classified as net assets with donor restrictions if the board long-term invests some donor-restricted contributions that cannot be spent in the near term. These board designations, both board-designated net assets or board-designated endowment funds, should be disaggregated on the face of the financial statements or in the notes. The last classification we will cover is when to release a restriction from a donated asset. Prior to the update, not-for-profit entities would release the donor's restriction over the entire estimated useful life of the asset. However, now the entire amount of the contribution of property, plant, or equipment, or cash shall be reclassified as net assets without donor restrictions at the time the asset is placed in service. This allows for better comparability and makes the new asset reclassifications more useful. There could be some exceptions to the placed in service approach. For example, a donor could specify that a donation restricted for the acquisition of property, plant, or equipment must continue to be used for a specified period of time. In such circumstances, the restriction would expire over the period of time that the asset is to be used. Thanks for watching this brief overview on the new net asset requirements. If you have any other questions, please feel free to contact us at Heinfeld Meach. Have a great day!